And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story, the whole enchilada. It's the Lance Roberts Show, presented by Clarity Financial. It's life, money, and sweat equity. Now, welcome in to the Lance Roberts Show.
And welcome to the show today. I'm your host, Lance Roberts. You can stream on live at realinvestmentadvice.com. Simply go to our podcast page or just subscribe to our YouTube channel. You can pick up our live feed every single day there for you as well. Talking about the markets, special topics, of course, as always, your money, the most important thing. Well, today the markets ended down just a little bit lower. Now, there's some good news with this is that over the last, few days in particular, the market's been a little bit weak after breaking out to all-time highs, and we noted that earlier, just recently, last week, we talked about the markets breaking out to all-time highs, and that was after we had consolidated along the previous breakout when we had broken out back in January above the January highs. We then consolidated this month around the bottom of that. We came back to that previous breakout, consolidated, ramped up to new highs, and of course, this is where everybody got really excited. And of course, the markets got very overbought on a short-term basis. And we had talked about the fact that with Trump initiating more tariffs overseas related to China, that it was very likely that we could see a bit of a pullback here because of the fact that the markets had gotten very extended on a short-term basis. And again, we gotten very overbought on that rally to all-time highs. A pullback has been a good opportunity to add exposure to portfolios. We're now getting that pullback here. We're getting back to levels that over the last several months in particular have been levels that have been good buying opportunities to put equity to work. So, if you've been looking for an opportunity here in this rally, and particularly as we potentially get it set up for the end of the year, you're looking for these bits of sell-off that provide you an opportunity to add some money to portfolios on a little bit better risk-reward basis. Now, having said that, I do want to draw your attention to a couple of important points, though. Here was the breakout that we saw earlier this year above the January highs, and of course, that provided the base here right around 2,800, just 2790, 2800 was that kind of that breakout level that the markets retested. We then rallied to all-time highs from there. We're now potentially in a range around this 2950, 2960 area that we may get a little bit of support here, but the real support, again, resides back down here at that previous breakout level. So somewhere in here, we're likely to find a short-term bottom for the markets. The important point here is that the trend of the market still remains very bullish at this point. So despite concerns over tariffs and interest rates and things that are going on, which will matter longer term, and we're going to talk about those in just one moment, but in the short term, right now, the bullish trend is still very positive. The markets are trending positively. There's really not a lot of concern relating to investors and how they view the markets. In fact, they don't really care at this point about anything else. The markets are rising, and of course, we're continuing to see speculation in areas like marijuana stocks, etc., that normally really kind of allude to the fact that we're in that momentum-driven market. So we are seeing some rotation here. Now, despite the fact that we're talking about tariffs and that we're talking about the issues of potentially higher interest rates, which ultimately impedes the economy, one thing that we do want to note here and have continued to talk about here as of late has been this issue of sector performance. Now, just recently, we've seen a big pickup in the industrial sectors that have been really kind of lackluster earlier this year. Money started rotating and looking for the industrial sector because it was oversold and, more importantly, it was kind of out of favor. The same thing potentially we may see come around into into materials as well, because materials, despite the fact that those are the basic poster child of what happens with tariffs, those are the companies that are most impacted by rising tariffs. One thing you see here is a rising trend in the base price of basic materials. So again, what money has been tending to do is very quickly and very rapidly in this market is to rotate from leading sectors to lagging sectors. Those become leading sectors, then we rotate back into lagging sectors again. which also suggests that, areas that have been really lagging as of late, like utilities, obviously getting back down to oversold conditions. This has kind of been an area where we get to a point that where when money starts looking for that oversold kind of defensive sector, we see money moving back into utilities. They had a big run earlier this year, having a pullback and a consolidation from that run. Looks like we're setting up here potentially for another addition. Real estate's also another one of those areas that we'll continue to kind of keep a watch on, getting a pullback there. Discretionary continues its basic upward trend here. And of course, a lot of that has to do with the fact that Amazon's now in that group, Apple as well. And those two stocks continue to really kind of carry the market. In fact, over the course of the last couple of sessions, Amazon's picked up here of the last two sessions after being under a lot of pressure here for the last couple of weeks. Seeing some rotation back into Amazon. Apple's the same way. Seeing some pressure on Apple. Of course, they had a big ramp up leading into their earnings announcement. You saw some cooling off as they announced their new iPhones. And of course, now you're seeing a little bit of money over the last couple of days starting to kind of bottom fish in Apple. And of course, what's important there is that we continue to build this base right around 217 for Apple. So that's actually been a decent entry point to pick up some additional shares of Apple. Google, exactly the same way, seeing a little bit of pickup here. Nice basing pattern in Google. Now, the reason I bring this up is that these FANG stocks, the Facebook, Amazon, Netflix, Google, those have been the leaders of the markets. Those have what contributed to the big bulk of gains in the S&P 500 earlier this year. They've not been leading as of late, but we're starting to see all these stocks beginning to base here, looking like potentially a potential entry point here and another potential run for these FANG stocks going into the end of the year. Now, remember, as we start to move into October, November, December, this is where you're going to start seeing mutual funds, hedge funds that have been lagging this year try to pay a bit of catch up. And of course, what we see here is this end of the year window dressing for companies as these mutual fund companies, hedge funds, etc., want to be out of this year with some gains in their books and also holding the most notable stocks in their books, which will be the FANG sectors in particular. So Amazon, Google, Apple, those are going to be the stocks that potentially have some of the better opportunities heading into the end of the year. So when we come back from the break, the important thing that we'll get into, though, is that despite the bullish short-term sentiment, which is, look, it's clearly bullish, the trend is positive. When we come back, I want to talk about some of the issues of complacency and what's driving this market that longer term, as investors and as portfolio managers and as individuals, we need to be paying attention to. So we'll come back and get into that story next. Also today, we're going to be covering the 12 investment rules to manage your portfolio better. So stick around. Got a lot of stuff coming your way today at the Lance Roberts Show right here at realinvestmentadvice.com and online at our YouTube channel. Be sure to subscribe there. Get all of our updates as we put them out every single day. realinvestmentadvice.com. Be right back.
Follow Lance on Twitter at Lance Roberts or go to lancerobertshow.com.